Hello and welcome to another episode of Financial Deep Dive with CWT. So a lot's happened in the market lately. Actually this entire year, the market has done absolutely terrible. It's not performed very well at all. And there's a lot of people out there who think that this trend will continue. I don't necessarily agree, but I did want to make an episode talking about how to take advantage of a market downtrend. And while I don't recommend that anyone does any of these, the kind of investing that I like to focus on is very long term. But if someone actually believes that the market will continue to downtrend over a long period of time, these ways could be good ways to make money while this is all happening. And I wanted to make an episode talking about that. But first off, my credentials. My name is Caleb Tanner, and I'm the owner of Finance by CWT, which is a financial media company. We do a lot of stuff like blogs, podcasts, and you can learn all about all of it at financebycwt.com. But anyway, so in today's episode, I want to talk about basically taking advantage, like making money while the market's falling down. Because there's a lot of ways to do this. First off, you can actually short the S&P 500, which the S&P 500 is the top companies in the stock market. Like the 500 companies that have like the highest valuation, like the top ones. And when the market falls, the S&P 500 basically moves as the market does. Like if you take an S&P 500 ETF, like for example, VOO, which is from Vanguard that just tracks the S&P, and you compare it to a total market fund like VTI, which is the entire stock market, just moves with the market, you'll see that they basically returned essentially the exact same, and that's because even like VTI total market is heavily dominated by the top 500 companies. But you can actually short the S&P 500 through an ETF called SH, that's the ticker, and you can actually open up a short position in the S&P. And what that means is you basically are borrowing shares and selling them instantly and then buying back at a later date. So and I'm making these numbers completely up, let's say you have a stock that's $100 and you short it. So you sell the stock at $100. The stock falls and it's now worth $50. And then you buy the stock back, you just made $50 off of that happening. Because now you still have to give the share back that you borrowed, but you're giving them a share worth $50, and you pocketed the $50 that it went down by. And you can actually do the same thing with the S&P 500 through an ETF like this. You can open up a short position and short the entire S&P. And if you believe that the market will continue to decline over a long period of time, then it might be beneficial to open up a short position and short the S&P. Also, there's shorts that you can do, with the total market, but also if you just believe, like let's say tech stocks, which, have so far this year fallen quite a bit. If you think that trend will continue and you want to make some money off of that, you can actually, so there's an ETF called QQQ, which is, tech stocks. And, the ETF over a long period of time has performed amazingly. Like it's a great ETF, especially for a long-term trade. But if you think that the market will continue to fall over the next few years or even the rest of this year, and you want to take advantage of that, you can actually, the ticker is SQQQ, which is literally just a fund that shorts the QQQ. And you can take advantage of it that way. So if you believe that tech stocks will continue to decline over, a long period of time, you can actually, buy a fund that just shorts QQQ and make money that way. And if you look at SQQQ, while the market's been in a downtrend this past year, the ETF has done very well and likely will continue to do very well, especially if there actually is like a downtrend like a lot of people are thinking. Like if we are actually entering into a recession, if we're actually going to see a stock market crash, then opening a position in the two things I've mentioned so far is going to be a very beneficial decision to do. And again, I don't necessarily think any of that's going to happen. I do think, and I said this early January, that I do think this is going to be a down year for the market, and this is before any of this actually happened. But I don't, I'm not someone who normally bets against the market. I go along with the market because over a long period of time, both of these ETFs have actually performed terribly over a long period of time. Is normally the market does really well. Like the S&P hits their all-time high more often than it does not. But if you believe that the market will be in a downtrend and will continue to be in a downtrend for a long period of time, if you actually believe we're about to enter recession or about to if we're basically just feeling what's about to be a larger crash, then if I thought that way, these are the ETFs I'd be buying right now because I want to profit off of it. Also, there's another one that I wanted to mention. So, Kathy Wood owns ARK Innovations, which they have a lot of different ETFs. And because of, while Kathy Wood does absolutely amazing during a bull market, like 2020 when stocks were just absolutely exploding in value, she did really well. And she does really well when, stocks perform that way. But in a period of a bear market, and we've seen that this year, in a period like what we're seeing now, ARK has performed terribly this year. They've lost a lot of money. And if you believe that that is going to continue, if you believe the market is going to keep declining, and you believe that the ARK fund is going to continue to lose a lot of money, or even if you think the market's going to do well, but the particular stocks that Kathy Wood holds through ARK is going to do very badly, I'd recommend there's an ETF called SARK, which is just shorting ARK's ETFs. And by owning that, while the ETFs continue to fall, you'll continue to go up in value. And because you're basically betting against the ARK fund. And again, I'm not necessarily recommending that. And I do think that Kathy Wood's strategy is very good in a bull market. But in a downtrend market, I actually think she's going to do pretty badly. And I do think, if I could, basically see into the future, I knew for 100% fact that the market was going to continue to go down for the rest of the year, I would be buying SARK in a heartbeat because I don't think that her investment philosophy is really going to uphold in a bear market. She might completely outperform everybody in a bull market, but in a bear market, I think she'll be way below everyone else. So that's an ETF I'd stay from. SARK is one that I would actually buy quite a bit of if I thought this downtrend would continue. And I'd be shorting the actual market itself and shorting the S&P mostly. I'd mostly just short the S&P, but I don't necessarily think that that's how the market's gonna go. But a lot of people have been wondering how to actually profit from that. And I've seen, a lot of people, because the market's down, gold's down, crypto's way down. And with all that, it's how do you actually make money in a market like this? And the answer is shorting it, which is not something I normally do because I'm definitely a bull rather than a bear, long term. And you can see that from the ETFs themselves, they definitely perform really terribly long term. But you can't deny the fact that this year they performed insanely well. And if you think this will continue, if you think stocks will continue to fall, then buying the ETF is kind of a no-brainer at that point because that's how you profit during a bear market. So, in conclusion, basically, SH shorts the S&P 500. SARK shorts ARK Innovations. SQQQ shorts technology stocks. And if you think something's going to happen with real estate, if you think something's going to happen with really a particular different kind of market segment, if you think gold, for instance, you can basically find and fund that shorts all these really. And if you are pretty confident like that and that's what you want to bet on, those are the moves to make. Again, I'm not necessarily going to be betting on that myself. Right now I have no plans at all to buy any of these. But if I start thinking that the market will continue to decline, I'm probably going to start short and actually, make some profit on the way down. And, still buying more into like all the ETFs and all that, like the S&P 500 ETF, still buying more in QQQ and all that. Because over a long period of time, I think that'll make, a lot of money. But in the short time, for short time profits, if you want to make a short term prediction, that's kind of the way to go if you think the market will continue to downtrend. Thank you so much for listening to this episode of Financial Deep Dive with CWC. I want to ask all of you to subscribe to either the YouTube channel or the current podcast platform you're currently listening on. And make sure to visit financewithcwt.com and check out all the content that we produce. Thank you.